Okay, so I will be presenting the policy paper entitled Digital Financial Inclusion as a Pillar of Resilience Amidst COVID-19 in the Mediterranean and Africa. This policy paper is co-authored with Professor Rym Ayadi, the President of the Euro-Mediterranean Economists Association. So I will start with the challenges imposed by COVID-19, government responses, and link to financial inclusion. Containment measures taken by countries are essential to achieving reduction in the transmission of COVID-19. However, these measures impose a heavy burden, particularly on households and MSMEs, in terms of business closures, and that negatively affected their income and employment. So, to respond to these challenges, governments implemented a number of policies, including first, social measures, such as disbursement of cash assistance to the most vulnerable, and monetary measures, such as facilitating credit to MSMEs via banks and credit guarantee schemes, interest rate cuts, lower reserve requirements, and so on. However, the effectiveness and reach of such policies are conditional on the ability of these groups to access financial services, thus making financial inclusion an essential pillar of resilience to the shock. Looking at the level of financial inclusion in the Mediterranean and Africa, in the Southeast Mediterranean, less than 50% of adults report having any type of account. And there is limited mobile money usage, very high cash use. Sub-Saharan Africa ranks the lowest amongst all regions in terms of access to formal financial services provided by banks. However, mobile money accounts enabled broad success in reaching out to the unbanked in this region. For example, in Kenya, where the M-Pesa service was launched in 2007, 73% of adults report using mobile money. Both regions are characterized by low level of financial literacy, and the majority of small businesses in those regions do not have access to loans, and a significant percentage identify access to credit as a major constraint. So all these factors represent a major challenge for governments in terms of reaching out to MSMEs, households, and the informal sector who are severely hit by the pandemic. So the main proposal of this policy paper is digital financial inclusion, as it facilitates access to government support, transmission of policies mentioned before, it eases the impact of movement restrictions and bank branches closure. It facilitates access to formal loan accounts on a longer term via electronic records, and it reduces reliance on cash. Our main policy recommendations are as follows. First, promote the greater use of mobile digital wallets. Most importantly, governments to work towards digitizing social payments. This would enhance the trust in such payment services. Second is facilitate individual and MSME access to banking financial services, enabling them, for example, to open a new bank account online with key information requirements. This could be authenticated, signed online without the need to visit a bank branch. Third is reach out to MSMEs that lack access to finance through innovative, low-cost mechanisms. This could be done by enabling MSMEs to apply for credit guarantees provided by governments online. Fourth is increase digital awareness and enhance financial literacy, which is called digital financial literacy. And this can be done through utilizing different media platforms in order to provide digital financial education to the most vulnerable, such as the less educated, elderly, MSME owners, and women. Fifth is the inclusion of the gender perspective in designing financial support policies, as social norms and culture may disproportionately impact the employment and income of women during the crisis. And this can be done through targeted lending mechanisms that facilitate access to credit with preferential terms for women-owned businesses. We also recommend more focus on financial inclusion channels in rural and marginalized urban areas through targeted enhancements for digital and internet connectivity, governments to invest in digital infrastructure and make it affordable, in addition to targeted enhancements to financial literacy. Finally, ensure that compliance with international regulatory requirements does not have undue consequences in relation to financial inclusion. And here, digital identity has the potential to remove some of these major barriers to accessing financial services. Beyond these actions, global and regional initiatives must continue to design tools and develop strategies that will promote digital financial inclusion. Thank you.